All righty, welcome everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 21st of July. I was going to say, if anyone could tell me, let's see, this was my morning today at around 7 o'clock, talking with Keeve. If I knew how to do this better, I would show you, but that's where I was hanging out this morning. Pretty neat because had some good fishing. Let's see if we can find the kids. Kids are kind of wiped out. In fact, the good one, that sometimes happens to the dads when they're out fishing. But someone tell me, where am I at today? Anyone know where I'm at today? I may have said so in an email, but where am I at today? Hopefully I don't sound too pixelated. Where am I at today? Can anyone tell me where I'm at today? Can you hear me? Flaming Gorge, there you go. I'm up at Flaming Gorge. This is my weekend where, well, I guess my week where I spend the time going through with my kids up at Flaming Gorge, absolutely having a blast. So this is going to be, this might be a little short and sweet today. All righty. Verizon and Lockheed Martin. We are going to choose to not protect the stock positions through earnings. Anyone tell me, why would you think I would not want to protect a stock position through earnings? Why would we not protect a stock position through earnings? Because there could be a couple reasons, but why would we not protect through earnings a stock position? Because some of you are going to make the question, and some of you are going to say, no idea how the stock reacts. They're looking good going into earnings. Yeah, I mean, the short answer is for both of them, they both have been beaten up unfairly. So we are choosing to see if they can bounce back with good earnings. That's basically our thought behind it. Yes, they're looking really good into earnings for channel checks, for new contracts that are earned, for number of subscribers that were up. But that is the reason why we did not protect Verizon today. Pretty sure Verizon today was up like 5%. But very rarely do we not protect stock ownership through earnings. And Google, we are going to run out of the money, I believe it's 175 puts due to their, can't type, their increase in advertising dollars. So we're going to have some catastrophic insurance in play there. We're going to do what we can to have them protected, but out of the money. Deal with someone there, someone said, well, Kevin, if you're doing that, what the heck is going on with Micron? Because Micron has had good earnings. They had beats top and bottom line, went up to 135 after hours, and now are trading at 113. See if I type that one right. So what gives? And my best answer is that they have risen from $65, which makes the $130 mark a 100% return, a Fibonacci Elliott wave serious retracement, and people are just taking a profit. It's really that easy. I don't know if that's the exact answer, but learning how to spell. But that would be my best explanation on Micron. And last but not least for you, could I spend, I've got a ultra high net worth individual that, again, the family's brilliant, full of lawyers. These individuals are absolutely brilliant. So I'd like to go over, is the stock market trading gambling? And I'm totally okay with you guys beating me up. But I'm curious if the stock market trading is gambling. So I want to hear your ideas. I want you to go ahead and beat me up. I'm going to tell you the stock market is not gambling. The main difference between gambling and the stock market, I actually have a PowerPoint. You guys interested in a quick 5-minute PowerPoint? There we go. Okay. So I do have this on my online somewhere. Let's do this one really quickly. I think it's a 16-minute video in online. Come on, fit the window, fit the window, fit the window. Oh, this is so annoying. On a co-pilot. Why is it not fitting into the current window? Huh. Oh. All right. Well, I'm sorry. I'm going to do it a little bit smaller for you. I thought I could fit it to the window, but I don't know what's going on. Although someone's going to tell me. Or not. Commando zoom next to fit to the window. That's a great idea. Thank you, John. Uh, nope, I'm not doing a great job of this. It's just fit to window. There we go. All right, thanks, guys. I'm going to edit that out later. Is stock trading gambling? And my belief, obviously, is are you investing or are you gambling? When I think of gambling, I'm thinking of waging money in a single event that has an uncertain outcome in hopes of winning. Gambling involves a game of chance where the odds are usually stacked against the gambler. And more importantly, if you just think about it, it's a one-time event. In an earnings report, you can be wrong. But gambling reverts to a single event where you have to be right or you lose. There's no two ways about it. So the question is, okay, what's the difference between investing or gambling? Investing does include speculation. In fact, I'm going to use that word as the word of the day, so to speak. Investing does include speculation, but it involves a calculated risk. Some people talk about, well, how's it calculated? You can lose every penny in a stock that you invest in. We know that. But there's some things you can do that'll change the risk in your trade. When you're investing, you can add a long put. You can lower your risk sometimes down to 4.5% of your total invested capital. If you're to do a collar trade, you could lower your risk down to maybe 1.5% of your total invested capital. But there's some things you do significantly different in investing. Investing requires a learning curve. There's no learning curve in throwing dice and gambling on the Super Bowl, on pulling a slot machine. A learning curve a learning curve for investing involves a methodical, systematic way to invest that has been proven by back testing methodology. Investing often has a positive expectation return, even though return might not happen in a desired time frame. One of the main differences in investing, it's not a have to win now scenario. You can win through a process or later on. Gambling's a game of chance. High risk, high reward for a single time only. Low odds of winning. The house is stacked against you. Negative expected return. And someone once asked me, Kevin, that's not true. But with all due respect, the thought process behind gambling is I hope I don't lose too much. I hope I can break even at the end of the month. end of the month, end of the weekend, excuse me. Your expectation is you hope you don't lose too much. That's what the thought process is with gambling. You have emotional highs, people yelling at the dice at the table. There's increasing risk. The more you lose, the more likely you are to lose. It's called dumping, where you now have to put more and more money in to try to win back what you lost. I call it excitement or social proofing. A lot of people lose in gambling for a status, a social status. I'm going to Vegas for the weekend. I'm going to Macau for the weekend. It's not so much about winning, it's the fact that you're there and you're there and can afford to lose. Again, must win attitude, you have to win on every roll of the dice, on every pull of the wheel, or you lose. And obviously, it's very time sensitive. Whereas stock investing has a series of fundamental analysis, technical analysis, sentimental analysis, economic event analysis. And if you're smart, you're going to hedge your risk. Something you really can't do in gambling. You double down. There's really not a way to truly hedge your risk in gambling. Stock investing has no limited time frame for profitability. Yes, you are looking at earnings events or scenarios that give you the ability to make money. But good traders are hedging their risk so that if you lose at an earnings event, you're hopefully making up some of the downward movement. You're adding more shares for a bigger, more explosive return after that event and into the next one. When you lose at a slot machine or you lose at the Super Bowl, there's nothing you're doing to hedge your risk to do better next time you do it. Same thing with poker, with 21, with craps, with the roulette table. It's always a game of chance. It resets its odds stacked against you every single time. I love the idea that good traders take many losses but win more than they lose. That's a mindset that, hey, you're not going to win every time you're in the stock market. And last but not least, you have a method to keep those losses small and to help you when the trends change. Obviously, for me, do you gamble or trade? It comes down to a series of questions to ask yourself. You need to look at the reasons why you're trying to make money. Is it to provide food for your family? Is it a great weekend out with your friends? Have you prepared and gone through a learning curve? And this doesn't mean that you lost your butt 10 grand the last time you went to Vegas. This is a methodical process. It's like counting cards, which is kind of illegal, right? Have you back tested your methodology? Well, I back tested last time in Vegas and got my butt handed to me. That's not back testing. That's just getting your butt handed to you. Do you have a must win attitude? If you must win every time you're putting money down, you're gambling. If you must win every time you invest in a stock, in a option, any type of market investment, you're gambling. The change there, an adjustment process. Does time frame allow the investments to become profitable? The longer you stay at the table, the better you're going to do? Doesn't work that way. The odds are stacked against you. Are you calculating your risks and are you doing so correctly? Huge difference. We can calculate our risk down to the penny on the most we can lose. In gambling, you lose everything. You lose everything you bet. There's no possibility to get it, to hedge your bet in a gamble. Anyway, I'm really excited to be talking to this individual to find out if they're gambling or if they're investing. One of the comments that was made to me, thank you, that's interesting. A 20% plus return is too much risk in the portfolio. So I'm just going to ask you, and I'm not going to call you out by name because I don't want to embarrass you. But the last 2 years in the stock market, they returned 20% plus. And no one here cried about it, thought it was too much risk. In fact, for this group, and when I say this group, I can say about 299 individuals that somewhere between 299 to 500 individuals that are watching this. For this group of people, no one complains when the stock market returns to 20% plus years. No one complains with the 30, 40, 50% plus year. We just count our money and we take it to the bank. For the comment that was made, it's too much risk if you don't know what you're doing. If you have it calculated, if you have a methodology, if you can make something to hedge for when it comes back, there's a significant difference at the way you're looking at it. So that's just something that you guys need to consider, at least for that one person, that, hey, if a 20% plus return is too much risk for you, why didn't you say something over the last 2 years? Why did you just be grateful, count that money, and run to the bank with it, right? Just things to think about. Okay, here we go. Russ, thank you for the comment, by the way. Earnings coming up. I'm going to keep that there. I believe last week it hasn't changed yet, but the big picture, we're not going to get a change in leadership, but yes, we will most likely get not a July, but we'll get a September rate cut. That's just the way that it's most likely going to be. Do read through this. Pretty interesting that you'll see where our president might be leaning for who could be the next Fed chair. Great information in the big picture on who that can be. Our markets. Sorry, I thought I had this already planned. Obviously, I'm playing too much, and I'm not taking the time to have this 100% prepared. Dow Jones Industrial Average, bullish. Not quite overbought, not quite oversold. Where's the MACD? Boy, our MACD I don't have in here. I'm gonna have to spend time working on getting my new charts up and running the way they should be. It's the RSI actually I don't have in here. So why don't I just go to where we're at? RSI, simple moving averages, pivot points, RSI. I signed up for stock charts, RSI, update chart. The RSI they now have on the bottom. All right, so this is Micron. Let's go back to the Dow Jones Industrial Average. I will make these right when we come in here. RSI sitting at 59.3. This is the laggard of the indexes. Yes, it's still doing well, but obviously it can be doing better, right? If we look at the S&P 500, newest all-time high, it's never closed this high. It's 6305 and 0.6. 69.75. It's really going to be hard to see the S&P 500 go higher. It might do it for the first time in a while where it stays overbought for a couple weeks, which just means we're looking for a pretty gloomy August, September, October. And we have, and also a new high on the NASDAQ composite. Update. It is overbought, 74.73. It's just going to matter for earnings if we stay a little bit overbought. Institutional on the Williams percent R. This is the index that still is outbeating the S&P 500, and it has for a decade. So I will get new charts in there that show everything. I'm just going to delete those ones. I'll do that later. I still think we're looking for a 2% July this week, second week of earnings season. Cliff Zions and Verizon for today. Verizon did very well. Coke tomorrow, Halliburton tomorrow, General Motors, Philip Morris, Valmont Industries, Intuitive Surgical, Lockheed Martin, Chubb. Wednesday, AT&T, Freeport McMoran, Hasbro, CSX Company, IBM, Mattel, T-Mobile, Tesla. Thursday, Comcast, Honeywell, Nokia, Valero, Intel, SkyWest. Intel will probably not be doing that well still. PSX on Friday. We're on a very low economic reports. Leading indicators were supposed to be down 0.1 and ended up being down 0.3. So we have another, how would I say it? We have another economic report for the future that's not looking good. Existing home sales are, dang it. Existing home sales are on Wednesday, new home sales on Thursday, durable goods report, and the durable goods without transportation comes in on Fridays. This will probably be a news-driven earnings week. Very interesting article. NVIDIA CEO, if he was a 20-year-old again today, what would he focus on in college? And his answer was pretty interesting. It's right here. For the 20-year-old Jensen who's graduated now, he probably have chosen more of a physical science other than software sciences, and then actually graduate 2 years from college. Where's it at? If NVIDIA CEO Jensen Huang were a student today, he would focus on the physical sciences. Physical sciences, and if you read through the article, it's more where AI is going to be going into the future and how to make robots that will work with the physical science of artificial intelligence. Lee gave me a comment a couple weeks ago that in California, he's not seeing the same rewards that maybe some others of us are, that maybe prices are going higher, that inflation is hurting him more than others. A very interesting article about the management of California. This is not just picking on Newsom. This is the management of California in general. And a very interesting article for you guys to read, why they have the highest gas tax and so forth. And then also, uh, I was doing an interesting check and found an interesting article on Walmart because, again, this goes back to Lee. He made the comment, well, in Walmart, I'm not seeing cheaper prices. I've checked some of this one, but yes, Walmart is admitting to where they don't have some cheaper prices. What's going up, what's not. Very interesting article where you can go through and read what prices are going up for Walmart and what prices are going down. So just a pretty interesting article. Something that I thought you guys might find interesting. And I want to give Lee Maxwell the credit for having me do a little extra work on some of this so I could better understand what prices are going up for him in the state of California versus what we're not seeing in other states. With that said, what questions do you guys have that I can answer for you today? I know this one was a little bit quicker. I apologize. Week off. I'm sitting in my car, barely having enough cell signal to go through this. Are there any questions you guys have that I can answer for you today? And yes, I will go over one more question that was asked earlier. Do you feel that it is still important to protect stock ownership during earning? Yes, of course, because that is the I don't want to say but that is the time when stocks can lose 15% or more within 4 weeks. A stock is most likely going to lose 50% or more of its value in a 4 week period, which is like a week before earnings and 3 weeks after earnings, is when a stock is most likely to lose 15% or more. Am I gambling on Verizon, Lockheed Martin, and Google? Well, right now I'm 1 for 3. We'll find out on Lockheed Martin tomorrow morning. We'll find out on Google next week. And Google, I do have puts in place. We're just doing the catastrophic ones. But if you do some research, it really is, it looks good. It looks like we're going to be in great shape. So again, just because I'm doing it this one time does not mean I'm now going to start running things without protection. Thank you, Stuart. Okay, I didn't see other questions come in. If it's okay with you guys, I'm going to do the best I can to get this up and running. I appreciate you being with me here tonight. I hope that if you have any questions in regards to is the stock market gambling versus investing, email me those questions. I'd love to answer those for you. Thank you for letting me practice this a little bit. Yes, I am stalling just a little bit in case any questions come in, but I don't see any coming in. Guys, appreciate you all. Have a wonderful week. Keeve is technically 100% in charge. I am watching and I am available via phone, but playing with the family, trying to have a good time. Guys, take care. I look forward to seeing you next week. Until then, trade safely. It's important. Bye bye.